Hello everyone, I'm Lewis, market strategist for Fullerton Markets. Right, so in this video, I'll be telling you guys the 4 types of Forex traders. So for beginners out there, if you are new to Forex trading or even just normal trading, it's important to know what type of trader you are, right? So there are 4 types, namely the scalpers, we have the day traders, swing traders, and lastly the position traders. Right, so let's talk about the scalpers first. Right, so for scalpers, right, they are fast in, fast out. Their aim is to get maybe 1 to 10 pips per trade, right, and they are usually on the very small time frame. So what's one good thing about scalpers, right? They are immune to Forex news. Reason why is because they will tend to avoid any possible Forex news that's happening. So for scalpers, there are 3 simple rules. First, the spread is very important for scalpers, right? They always aim to have very thin spread because of the time frame that they are in and the number of trades that they are trading in a very short time of period. So that's one. Second, they are very sensitive to news. So if there's any Forex news that is happening, right, they will always tend to avoid any possible news that will be happening during their trading period, right? So the third thing will be leverage. Because for scalpers, they in and out the market very fast for a very small profit. So leverage is very important to them to amplify their earnings. So of course, for scalpers, the advantages are you don't need to hold your trades for too long, right? Because holding trades overnight or even for a long period of time, you're exposed to possible volatility from market news. And second is that you are able to make a lot of trades within a very small period of time. For example, in 1 hour, you can take 8 to 10 trades if you want because of how small the time frame you are looking at. And lastly, it's easier for scalpers to take trades in the market because the possibility of the trade setup forming is very high, given that if you're looking at the M1 or M5 charts, every 5 minutes there's a new candle forming, so opportunities are abundant for scalpers. So next, we have day traders, right? So day traders are also known as intraday traders. Basically, they take trade in the day and they will close all the trades that they have within the day, right? So they don't hold any trades overnight, right? So a few good things about day traders is that they have a peace of mind because when they're sleeping at night, they no need to think about the trade that they could be holding. And next is that for day traders, right, there's an ease of analysis. Reason why is because they love the news. When news happen, they will usually write the market up or down, and at the end of the day, they will close the trades. So they are not exposing themselves for further market volatility. And lastly, for day traders, they have a very structured calculation. So for example, if they want to risk only 1% for a specific trade, it's very simple to go into the market because number of trades that they have at the end of the day is always 0, right? So every new day, right, their balance sheet is always starting with 0 with no running trades. So it's easy to calculate, how much risk they should be taking and what is the lot size that they should be opening, right? So next we have swing traders. So swing traders usually they take their trades beyond the day, but usually less than a week. So for swing traders, the profit margin or the number of pips they're looking at for each trade is around 50 to 150 pips. And for swing traders, usually they are trading on the higher time frame, right? For example, the H1, H4, or even the daily chart. And at the same time, swing traders are not bothered by intraday volatility, right? Because when they're looking at the H4 or daily chart, right, each candle forms only after a day or even after 4 hours. So within that candle, for example, a H4 chart, whatever happens doesn't really bother them because it will take maybe 2 to 3 candles to form their bias or their next course of action. And lastly, for swing traders, usually they are not so bothered about spreads because the spreads that they have usually won't impact their profits as much given the nature of the trades that they are taking. For example, they are aiming for 50 to 150 pips, right? So a spread of 1 to 2 pips would not damage or affect their profitability that much. So there are 3 advantages for swing traders. So first is that they are always looking at risk-reward ratio, right? So they are always looking at high risk-reward ratio. For example, if they are willing to risk 50 pips, they are usually looking to profit at least 50 pips or even higher, right? So for example, if they take a trade risking 50 pips and they are earning 100 pips, right? So that's a risk to reward ratio of 1:2. So this works in the long run because when they win that trade, they can afford to lose at least 2 trades before breaking even. Next, for swing traders, they can save a lot of time because of the time frame that they're looking at, right? Usually they're looking at the higher time frame. So what happens is that they only need to check their charts every few hours, right? Just to see how their position is running, right? So it's very hassle-free. So there's not a lot of monitoring on the trader side, right? And lastly, we have the position traders. So position traders are traders who take trades for a long period of time, right? It can be up to weeks or even months. Depending on the currency pair, for position traders, right, they are looking at maybe 500 to 1,000 pips in one trade. And in terms of time frame, they are looking at daily, weekly, or even the monthly charts. And usually for position traders, they hold a big capital in their trading account. Reason because they are not very bothered by volatility, but at the same time, their capital needs to be large enough to withstand the huge volatility in the market in weeks or months' time. Right, so of course, for position traders, they have to take note that they always try to find brokerage with very low transaction costs. Because when you hold a trade for a long period of time, right, there's always the holding cost. So the holding cost will indirectly affect your profits. So which is why they're always looking for brokerages with very low holding costs. Alright, so that is the 4 types of Forex traders in the market. So if you're a beginner or if you're still trying to figure out what kind of trader you are, try to look at the profile of these 4 traders and find what suits you the best. Okay, and I'll see you guys in the next video. Bye bye.